This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on August the 17th, 2012. Our time is 8:39 Mountain, 10:39 Eastern. The radio show runs in Toronto, AM 640, QR77 Calgary, 630 CHED Edmonton. If you ever miss a radio show, they are archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com, and we have a podcast through iTunes. You can sign up for the podcast. The radio show will come to you automatically every week. You can download it, listen to it anywhere you go. It was a fairly quiet weekend in the markets again. A lot of traders are off on holidays. We're sort of looking for a direction in the market, although we did have some fairly big news, and we will talk about it. Big money going into hard assets. George Soros, John Paulson, hedge fund managers buying a lot of gold. Also central banks buying gold. And the big story really in some ways, Harold, this week was geopolitical news. It looks like Israel is preparing to attack Iran, and if that happens, the ramifications are absolutely huge.
You bet they are, Randy. This is probably the slowest month of the year, but all in all, the markets are holding in very strong. Gold market is having its problems getting above that 16 and a quarter price that I talk about every week. We traded as high as 16.22 on Friday so far. As we're taping the show, the market's trading at about 16.15, but the volume of the market is very, very light. All in all, again, once we get above this 16 and a quarter level, we need to break 1640 on a short-term trade, and then 1700 is a very important number. We're just not that far away from the all-time highs in gold, and I feel very comfortable that we are going to hit those by the end of the year. Again, August is notoriously the slowest month of the year. Silver is trading as high as 28.46. Actually, silver did very, very well this week. So did platinum. Platinum's up $18. We're trading at $14.61. The thing is that there's some unrest in the areas where they do mine platinum, but gold is still trading much higher than platinum. Gold's at $1,614, and platinum's at $1,461. Don't forget, back in 1980, when gold and silver and platinum hit their highs, platinum was the leader at $1,100, and gold was next at $850. The palladium market's doing very well. It's up another $11. It's trading over $600. We're bullish on palladium. The oil market has done tremendously well this week. In fact, oil was up every single day this week, and we're trading right at $96 in crude oil. Now, a lot of that has to do with the fact that no bad news came out of Europe this week, and the fact is that things are heating up in the Middle East, and if a war between Israel and Iran does happen, you could literally see the price of oil go to $150 to $200. You know that crude oil is one of our top recommendations. With or without the war in the Middle East, I do believe that crude oil over the next couple of years will hit about $150. If we do have issues in the Middle East coming up at the end of the summer, which is very, very possible, you could see a rally in crude oil all the way up to $200 very, very quickly. So that's one of our top recommendations for the short term and the long term is the crude oil market. The Canadian dollar has done very, very well. In fact, it spent the entire week stronger than the U.S. dollar. Now, the U.S. dollar is up 25 points today. It's been languishing between 82 and 83 cents. It's trading at 82.65 right now, up a quarter. But the Canadian dollar is trading at close to the 101 level. So the Canadian dollar is actually doing very, very well. So all in all, we need to get out of the month of August. Again, the volume in both the stock markets and the commodity markets are fairly light, except for the oil markets and the grain markets. So the corn, wheat, and soybean markets, if you're not familiar with what's happening, there's a major drought in the midwestern part of the United States. This drought is so severe that they're comparing it to the drought of 1980 that caused billions and billions of dollars worth of damage. Now, again, when you add extremely high food prices, and it's not just corn, wheat, and soybeans, it's every single thing that you do, because bread and pastas and everything is made out of those grains. On top of that, our cattle is fed by them. So the fact is that cattle prices are skyrocketing in a lot of cases because the farmers are going to have to kill off some of their cattle because they can't afford to feed them. So all food prices are skyrocketing in price, and if this drought continues to go on and does more damage to the crops, add that to what's happening in the oil market, and now you've got a massive problem with inflation. Now, the fact is that we've been talking to you about inflation for a long time. In fact, one of the top reasons that we have recommended gold, silver, and diamonds over the past several years is because of inflation. You know, the Federal Reserve is trying to keep the interest rates as close to zero to try to spur the economy in the United States. However, that's not working. That's why we do believe that they're going to have to put additional monies called QE3, quantitative easing 3, into the marketplace in order to somehow boost this economy. But all in all, nothing much is happening. The economy is falling, and something is going to happen fairly quickly. In fact, the feeling in the markets is at this point is that we are going to see a massive rally the last quarter in the gold and silver markets. And that's the way the markets feel to me also. You're starting to get a lot of people that were out of the markets back into the markets. As Randy mentioned at the beginning of the show, George Soros is one of the most prolific investors of all time. George Soros, for those of you that don't know who he is, made $1 billion in one day when $1 billion was a lot of money when he shorted the British pound. So this guy is one of the most prolific traders of all time, and he's buying heavily back into the gold market, as is China, as is the central banks, as are other hedge funds. So now that the market is quiet, there's not a lot of trading, you're starting to get these positions coming back into the market. And when the market does hit, you're going to see this market take off like a freight train. Again, we've seen it happen before. In the 11 years that we've been in this gold market in gold and silver, which started with gold at $250, went all the way up to $1,900, pulled back into the 15 and change level. It's now back up to 16 and a quarter. There's no doubt that gold and silver are going tremendously higher than where they are right now. In fact, the major reason that you want to own gold and silver is because we know that inflation is going to be a massive problem going forward. Number one, by the Federal Reserve keeping interest rates down at zero, that weakens the dollar. Along with the fact that the United States has printed such a gigantic amount of money to pay debts and get the economy back on track, which again hasn't happened in quantitative easing 1 and 2, the fact is that the dollar is extremely weak, and if the euro wasn't in trouble at this point, the U.S. dollar would be down into the 70s at this point, and that's exactly where it's going anyways. The United States dollar at this point, at least for the next 4 to 5 years, is going to be like a doomed currency, and the only thing that's keeping it up is the strength of the euro, or the weakness of the euro. So all in all, I see huge inflation coming. I see a lot of investments going into the hard asset markets, gold and silver in the commodity markets along with oil and grains, and in the hard asset market, diamonds have never ever done better than what they're doing right now. We're going to talk about that later. All we want is for our Canadian clients, for the listeners to our show, to be on the right end of this trade, to make certain that if the you-know-what does hit the fan, and the fact is there's never ever been more talk about currency devaluations, about economies crumbling, about frightening things that could affect us in such a huge way. Then what does a small investor do? Again, if countries are going bankrupt and currencies are going under and hedge funds and things like that, what does a small investor do? A small investor right now has got to keep his head straight. What we need to do is we need to be extremely conservative because the risks out there are tremendous. You don't want to over-leverage anything. You don't want to speculate at this particular point. It's really difficult to make any amount of money in the markets as they sit right now. What we really need to do is keep a mindset of capital preservation, be able to keep our money and not lose it, because there's going to be tremendous opportunities down the road. If you're a believer in insurance, and most of us are, we own insurance on our cars, on our home, on our life, on our health, and everything like that, now is the time, if you don't have it, to own insurance on your financials. That's why you need to own gold. That's why gold in the last decade has gone from $250 to $1,900. There's a reason for that. There's a reason why silver's gone from, under $4 all the way up to $50. There's a strong reason for that. And the fact is that most of it is going to pertain against inflation, and that's what we're gearing up to. Diamonds, gold, and silver are the best hedges against inflation, and not only will you preserve your capital, but you'll make some money, and it'll offset the other investments that you have in paper assets, because I know most people will not sell out of their stocks. No matter how bad the stock market looks, most people will not sell out of it because of tax implications and things like that. Be very, very careful about the stock market. In fact, there's more money on the sidelines right now and more people exiting the stock market than in almost any other time in history. And again, all we want to do is be cautious and prudent at this particular point. We want to keep our money. We want to be in the investments that are going to increase to hedge against inflation. If oil goes to 150 and food prices continue to skyrocket, your cost of living is going to go up. By owning gold, silver, and diamonds and making money in those areas, that's going to offset the higher price of living, and that's what inflation really does. Randy, there's no doubt in my mind where we're heading at this point. I've got a very strong feeling that we're going to see by the end of this year this gold and silver market take a tremendous run upwards. I just want to make sure at this particular point that our listeners are understanding what we're saying. We had silver not too long ago at $50. It's down at $28 right now. This may be one of the better buying opportunities we've ever had to buy gold and silver right now.
And you can start your own precious metals investment account today. Speak with the company Harold recommends, Worldwide Precious Metals, wwpmc.com. Their telephone number, 1-866-623-2002. 1-866-623-2002. The website, wwpmc.com. And it's interesting, Harold talks about inflation. Great article in our newsletter. And you can get our free weekly newsletter. We send it out free of charge every week via email. You can go through it in 5 to 10 minutes, or you can spend hours if you want, but a must-read article in the newsletter. Ambrose Evans Pritchard, he's reporting this morning on the Drudge Report that Finland is preparing for a breakup of the Eurozone. And that's something, a story that we are following, but this is the story we have in our newsletter. Ambrose Evans Pritchard reporting, excess debt must go via inflation or default. 5 years into the long slump, it almost seems as if we're back to square one. And he says within this article that we're in a position, and you can read the whole article, excess debt must go via inflation. They either inflate it away or they default, and there's no chance in heck that they are going to be defaulting. We believe that you need to have your own financial firewall, protect yourself against the coming inflation that obviously people like Ambrose Evans Pritchard are reporting about. You either inflate it away or you default. We believe it will be inflated away. You need to prepare today for this. Speak with Worldwide Precious Metals, 1-866-623-2002. Their website, wwpmc.com. And there is some very, very big money going into precious metals. As we stated, in fact, in our newsletter, we have a chart. Central banks are moving into precious metals in a major way. You can see that chart in our newsletter. We also have a gold seasonality chart over the last 30 years. And we are at that time of the season where gold and silver do very, very well. Check out that gold and silver seasonality chart. Besides central banks getting into gold when in the past they had been selling. Paulson, John Paulson, George Soros, adding to their position in gold. You can read the story in our newsletter. Bill Haynes, who is a purveyor of precious metals, says we are now seeing huge orders for physical gold and silver. Right now we are seeing very large physical orders for both gold and silver. It's very interesting because these are entities with large existing holdings for both physical gold and silver, but for some reason, right here, right now, they are adding sizable quantities to their existing positions. These are wealthy individuals that are very strong hands, and they are taking the metal right out of the market. And believe me, these individuals are never sellers. They see gold and silver as a hard asset that has been money for thousands of years, and they are pulling it out of the market and putting it away. It's also very interesting that we see an equal amount of money going into both gold and silver. And Haynes says, I can tell you this is money that has been patiently waiting on the sidelines for weeks and even months in some case. The belief by these strong-handed buyers is that the bottom for gold and silver has been achieved, and now is the time to add to their position. Savvy buyers know that summer is historically a great time to buy, and that is exactly what they have been doing. That is a great story from King World News. Eric King interviewing Bill Haynes. You can read it in our newsletter. I know that John Embry as well, Harold, was quoted as saying this week that you're going to see a spike as physical metal is really shockingly tight. And he says it's very clear there's a steady buyer in the market. And if Haynes is right, obviously it could be the Chinese stepping into the market, other big buyers. Now is the time that you see a Soros, you see a Paulson positioning themselves. And you have governments talking about possibly Finland talking about preparing for the euro to break up. And that isn't even taking into account the geopolitical aspect if we get into a scenario where there's a war between Israel and Iran. You know, now is the time to create that, as Jeff Clark said this week, build your own financial bomb shelter. I'm saying build your own financial firewall against what's happening in the world today. Protect the money you have.
You're 100% right, Randy. I'll tell you, and those articles are happening every day now. So I have the exact same feeling. The feeling is that the market's getting ready to take off. And the worst thing is to try to chase after a running market. The fact is that if you believe that these issues that we're talking about are real and going to happen, then you need to act on it in some way, shape, or form. Buy physical gold and silver and tuck it away, put it away for the next 5 to 10 years, and that's your insurance policy against these type of scenarios. When countries like China are trying to corner the gold market, and when you have guys of the nature of George Soros and Paulson buying into this market, it's for a very specific reason. So, you know, the fact is that the short term with the currency markets, that will keep the markets going. But the big thing is inflation. And in 1979 and 80, the last time we had massive inflation, that's when gold went all the way from $125 all the way up to $850, and silver went from $1.25 all the way up to $50. So again, there's a reason when those markets run like that. It happens for a reason. Not too often does gold and silver run. Back in the 90s, when the U.S. dollar was strong, the economy was strong, and everything was great, gold was down to $250, $300. So, you know, the fact is that when there's no reason for inflation to be in the market or these type of problems, gold is not a good investment. But right now, it's the exact opposite. Gold is one of the best investments. When I say gold, I mean gold and silver, along with oil and the grains, is what's really capturing the market right now, and that's what's going to bring on short-term inflation. And before you know it, you're going to start to see the Federal Reserve start to raise interest rates. The other thing that Randy said is 100% true. The gold market and silver market are very, very tight because it's a different market between the futures market, where they trade on paper and leverage, to people in countries that are buying the physical metal and taking it home with them. The market is very, very tight, and very soon you're going to find that people that want to take, or investors that want to take delivery on their futures contracts, there won't be the silver to take advantage, and that's when you'll see silver prices go well over $100. So it's a great buy at $28. Gold's a great buy at this level. I'd say get some protection, because we're going to see some fireworks going into the last part of this year.
Build your own financial firewall today. Protect yourself against all the things that we've talked about over the last 10 years, and really it's a culmination of the last 10 years coming up here in the next quarter. There's some serious issues that need to be dealt with. 1-866-623-2002. The website, wwpmc.com. Start your own precious metals investment account today. Speak with the company Harold recommends, Worldwide Precious Metals. 1-866-623-2002. The website, wwpmc.com. It was interesting. A legend in the investment business for precious metals, his name is Keith Barron, said this week, people are frightened. Money is pouring into Switzerland and gold. Well, the job numbers are just not improving in any meaningful way. Now, increasingly, you're starting to see towns and cities declaring bankruptcy in the United States. I think you're going to start seeing people park money into gold and silver again. Now, what's going to happen? What's going to happen is a very big move for precious metals. When you start to see pension funds wake up and move their money into precious metals to protect part of the investment. We will see bubble behavior at some point in time, but that is in the manic phase, and we are a long, long way away from that, because the man on the street is not buying gold. Not yet. Eventually they will. Eventually everyone will, but we are a long way from that behavior right now. Greg Hunter has his own blog, and he used to work for CNN. He has a financial blog. He interviewed Charles Biederman. Charles Biederman is the CEO of Trim Tabs, and Biederman has his own blog as well that's quite good. You can find it on the internet. He was interviewed and said, "What else is there this week besides gold? If Europe, the United States, and Japan are all printing money to pay their bills, what is there besides gold? Everyone should be holding physical gold in their portfolio." Biederman thinks Europe is a mess. The tax revenue is nowhere near enough to pay government expenses, so he thinks Europe has to implode. The U.S. will follow Europe. Will the banking system survive? Biederman says probably the big guys won't, but hey, maybe they'll get bailed out again. In America, Biederman says that the United States government is printing about $100 billion a month, and it's not generating any growth. He expects stocks to go down by about 50%. But he's saying, what else is there other than gold? One of the interesting stories that came out this week, and it is in our section of the newsletter, U.S. Debt and Deficit. And this goes to what Biederman is saying, Harold. We have about 2 minutes left here. California's revenue falls 10% below forecast. The California tax revenue trailed forecasts in July by $475 million, or 10%, below assumptions in Governor Jerry Brown's budget. That, according to the state controller's office. This is the scenario you run into. You're having massive deficits in the United States, not only federally, but on a statewide level. Also, cities going bankrupt, and it's a recipe for disaster. This is why we're saying, with about 2 minutes left here, Harold, build your own financial firewall, have your own financial bomb shelter, because we were right before, we're going to be right again. It's just a matter of the timing.
You bet. And the thing is that the reason that these individual states are going bankrupt is because of the lack of tax revenue. Less people are working, less people are paying income tax. That's why the country's in trouble, and because unemployment is so high. So I don't see that situation improving itself for an awful long time, and I don't see the housing industry in the United States getting back on track for at least another 5 to 10 years, and that's where most people have their net worth, their major net worth is in their home, and they lost all that. So again, the situation is definitely dire. It's something that we need to pay strict attention to, because one bad move can wipe you out, and that's the last thing in the world that we want to see. We want to remain very conservative and not make any type of financial moves that's going to put our clients and listeners into any type of financial problems whatsoever.
Bill Fleckenstein said this week, and he is a hedge fund manager, and he made a lot of money short-selling the financial crisis. The Fed really is the engine or the driving force behind much of what's gone wrong in the United States in the last 20 years. The equity bubble was a disaster. Then the real estate bubble was even bigger. But it's not just those two events and their consequences. We had about 15 to 20 years of where people lived beyond their means and didn't really bother to save or worry about the future. You see the impact now in cities, counties, and states where they are going bankrupt, or they are finally admitting they can't meet their promises. As a country and on a national level, we've got this monstrous debt that we've rolled up, and we are going to have to deal with it sometime in the near future. Protect yourself. Have that financial firewall. Have that bomb shelter. Create it for yourself. 1-866-623-2002. Invest in precious metals. Call that number. Start your own precious metals investment account today. The website, wwpmc.com. We'll talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on August 17th, 2012. Our time is 9:04. That is Mountain, 11:04 Eastern. Our radio show runs AM 640 in Toronto, QR 77 Calgary, 630 CHED in Edmonton. And if you ever miss a radio show, we are portable. We are archived on Harold's website, rarecoloreddiamonds.com, HESradio.com, and we are portable via iTunes. All you need to do, and it's free of charge, does not cost you a thing. It's simple, easy peasy. I helped my next door neighbor do it the other day. You go and you download iTunes on your computer, and you sign up for our podcast. It's free, and it just automatically shows up there, and you can listen to it anytime you want. To invest in precious metals, 1-866-623-2002, 1-866-623-2002, the website wwpmc.com, and obviously another component of a financial firewall, building your own financial bomb shelter, is having an allocation of rare colored diamonds, and it was August of 2005. And I know this for a fact. Harold Siegel was the very first person to advocate investing in colored diamonds on the radio. He wrote a very special report that we sent out at that time. And on top of it, he talked about diamonds as an investment. And back then, no one was talking about diamonds as an investment. The report was Naturally Fancy Colored Diamonds, the Best Kept Secret, August of 2005. I still have that report printed out, time-stamped. And Harold, back then, you were right, and obviously the market has proved you 1,000% correct, because it has been a massive, massive winner investing in diamonds. You can learn more by going to rarecoloreddiamonds.com, speaking with Harold at 1-800-432-1022, and take a look at the featured diamond of the week. This is a stunning diamond. It's a 3.18 carat pear-cut fancy yellow internally flawless diamond. And we have the video for it on the website. There's a picture of the diamond in our newsletter. You can get our newsletter from Harold, but it is absolutely stunning, the featured diamond. And Harold, back 7 years ago, August 7 years ago, you wrote this special report, and there's been a lot of Johnny-come-latelys and copycats, but the truth is there's no one like Harold Siegel at rarecoloreddiamonds.com or hsfineauctions.com. And the thing that differentiates you, besides all the intangibles, is you have the highest quality diamonds and the best connections in the world.
Well, thank you very much for all the wonderful things you said, Randy. That's very, very nice. And again, back 7 years ago, nobody was talking about the rare colored diamond market. It's a very quiet and private type of market. And it's such a tiny market that, again, you can't mass market a market like this because there's so few diamonds available that are of investment quality. So when we wrote the article, Rare Colored Diamonds, the Best Kept Secret, there were still a lot of people in the industry that didn't really go along with the investment aspect of the business because there was never a way to resell diamonds. Everybody knows that diamonds go up in value. All you have to do, if you've been married for 20 years and you bought your wife a diamond ring back 20 years ago and you remember what you paid for it, just take it into a jeweler, get it reassessed as to what it's worth, and you're going to find that diamond, even if it's a white diamond, has gone up substantially in value. Probably in the last 20 years, it's gone up 300 to 400%. So diamonds have always been great investments. It's just been a matter as to how do you resell them, and I've always known that. So basically, when we built rarecoloreddiamonds.com, we also at that point put in the plans to build a secondary market to resell diamonds, because that never really existed before. And basically, we built 8 Siegel Fine Auctions, the only live real-time auction house that sells and resells very rare diamonds, gold and silver coin sets, rubies, emeralds, and sapphires. So we've had 7 auctions. They've been tremendously successful. We've sold tremendous diamonds. In fact, for a brand new business, the top diamond that we sold so far was $150,000, which is a very sizable diamond. And on top of that, we've sold Oprah Winfrey's pink diamond necklace. So the company is getting tremendous press. You're going to see tremendous news releases coming out on 8 Siegel Fine Auctions because it's the only company of its kind, and I built that for my clients. So if you are going to invest in rare colored diamonds, which is a phenomenal investment, I'm going to tell you about it in a couple seconds, you do want to definitely entertain the idea of dealing with my company. We're the longest in the business with the most experience, but we're the only company that can resell your diamonds for you. So the fact is that's extremely important down the road because the profit potential for rare colored diamonds is tremendous. Now let's look at this as an investment. Number one, not all diamonds are investment quality diamonds. In fact, we recommend 2 different types of diamonds for investment purposes that are still very reasonable in price. One are yellow flawless diamonds, which are extremely difficult to get. They have to be flawless or internally flawless. And number 2, you also want to invest in argyle pink diamonds. Starting off with the yellow flawless diamonds, these diamonds are extremely safe. They have never, ever dropped in price since I've been in business in 1980. They double in price every 4 years because they increase in price by 25% a year. So every 4 years, these diamonds will double. And the exciting thing is, during times of high inflation, which is one of the reasons that we recommended diamonds in the first place, because we feel very strong there will be massive inflation going forward. In 1979 and 80, when gold went to $850 and silver went to $50, our diamonds went up 500% in 2 years. 500%, meaning a $20,000 diamond turned into a $100,000 diamond just because of inflation. So gold and silver and diamonds do extremely well during times of high inflation. That's why we've recommended this to you for the past decade, and they've done extremely well. Now, maybe 100 yellow flawless diamonds are available in the course of a year. We cut 85% of all the yellow flawless diamonds in the world, and most of those go to my Canadian clients. We put these away for retirement and for safety and for profit. Every 4 years, these diamonds will double. And if you were to take $20,000 and put it into a yellow flawless diamond and put that away in your safety deposit box, or put it on your wife's finger as a beautiful ring, and just keep that for 10 years, that diamond in 10 years could be worth close to $100,000. If you took $20,000 and put it into the stock market, I highly doubt that in 10 years that $20,000 will be worth anywhere close to what that diamond is worth. The other thing is that the diamond never ever falls in price, because there's so few of them, 100 possibly for the entire world. Believe me, it's very easy to create a shortage in that market, which we have done. There's very few of these diamonds available. We cut and polish them from rough diamonds, and then we turn these over to our clients, and we will send you our newsletter each week, both our financial newsletter. Every month we will also send you our diamond newsletter. We will send you auction results as they happen, and when the time comes to sell the diamond, we are the only company that can resell that diamond for you. So there's been a lot of firms since we've opened up that have copied what we've done, which is fine. You know, on every corner there's a Wendy's, a McDonald's, and a Burger King. There's nothing wrong with competition. But again, I want you to realize that it's extremely important to deal with a company that's been in the business as long as we have and have the only way that you can resell your diamonds. And we built this for our clients to be able to do well. The only way that we make money on your diamond when you sell it is if you're profitable, because my company, if you sell the diamond through us, we get 10% of the profit only. So if we don't do well for our clients, we've wasted your time and our time. And believe me, I'm not in this business to waste anybody's time. This is one of the best investments you can possibly make. We have yellow flawless diamonds starting at $15,000 and going up from there. And again, these diamonds will double every 4 years in price. In fact, before the end of this year, we will be seeing another 25% increase in the price of colored diamonds, yellow flawlesses specifically, and that basically comes from the cutters. That's the cutters that buy the rough diamonds from the mine and cut them. And because there has not been a new mine that is open in the last 15 years to produce any quality diamonds, the fact is that there's less and less of these diamonds available. That's why the prices are going substantially higher, and you should see what happens when inflation hits and your diamonds go up 500%. These are the assets that I give to my grandchildren for their future. I put them in their safety deposit boxes, and 10, 20, 30 years from now, when they're ready to make their mark on the world, they've got something substantial to get started with. So all you parents and grandparents out there that want to do something for their kids and grandkids but don't want to speculate and take a chance to lose money, look at a yellow flawless diamond. Put that away for their future. You're going to find they'll do very, very well with it. And again, it's our pleasure to resell those diamonds for you down the road. The other diamonds you want to look at very strongly right now are Argyle pink diamonds. 95% of the pink diamonds in the world come from one mine only, and that's the Argyle mine in Western Australia. It's owned by Rio Tinto, a public company. They've been producing diamonds out of this mine since 1985, and the mine is starting to lose its production. In fact, Rio Tinto came out last year and said they will be closing the mine before 2018, which is only 6 years from now. If you're one of the fortunate few to own an Argyle pink diamond, you've got a diamond that will probably increase in the next 6 to 8 years by 10 times what you paid for it, meaning a $30,000 diamond could be worth $300,000 and a $50,000 diamond could be worth as much as $500,000, because there will be no more pink diamonds once this mine shuts down. We experienced a very similar situation in blue diamonds, where blue diamonds in 2005 were $200,000 a carat. 3 years later were $1.4 million a carat, because you couldn't get blue diamonds anymore. The same thing will happen with pinks. Now, we normally have a very nice supply of pink diamonds on our website, rarecoloreddiamonds.com. However, a couple weeks ago, one investor from Europe came in and bought 90% of all of our pink diamonds. So they took most of our pink diamonds right off the website, and the reason that they bought them from Europe is because, number one, they're so concerned about what's happening with the currency markets in Europe, and number two, this particular client was from London, where the British pound was worth 35% more than the US dollar, and he basically was able to buy these at a 35% discount. But don't worry, because we invested heavily in Argyle pink diamonds, as have my clients, and hopefully over this weekend, there will maybe be 20 new Argyle pinks. I have 80 Argyle pinks. We bought all of Argyle's production from the last couple quarters, and they will all be up on the website over the next week. We video all of our diamonds so you can see every aspect of them, and every diamond is certified by the Gemological Institute of America. These are amongst the best investments you could possibly make and the safest investments, and again, you put these away for the future. These are not short-term investments. You don't buy a diamond today and look to sell it a week or a month from now. You won't make any money. And if that's what your plans are, the diamond market is probably not right for you. In fact, the diamond market is not for everybody, because it's not an inexpensive market. You cannot get involved in investment diamonds, for $1,000 or $2,000. The minimum investment is really $10,000 to $15,000, and those are the diamonds that will go up the most for you. So again, we're extremely excited. We've got huge business coming in from Europe, and those are the same investors that will buy our diamonds when we go to sell them because of the currency markets. It's the only safe investment there is. They never decline in value. And again, between yellow flawless diamonds and Argyle pinks, over the next 5 to 10 years, that's where a lot of money is going to be made, and that's what we very highly recommend to our clients, is to get something into these safe and very profitable diamond markets.
Connect with Harold, rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number, 1-800-432-1022, 1-800-432-1022. And speak with Harold about his auction website as well, hsfineauctions.com. If you'd like to take a look at the auction website, just take a look around and see what has been auctioned off in the past, hsfineauctions.com. And take a look at rarecoloreddiamonds.com. Speak with Harold personally and privately about diamonds, 1-800-432-1022, 1-800-432-1022. And we should mention once again our featured diamond. This is an absolutely stunning yellow diamond. 3.18 carat, pear cut, fancy yellow, internally flawless. The video is on the website, rarecoloreddiamonds.com. We have a link to it in our newsletter. I have a small picture of it, a capture that I took. Harold, this is a monster. It is stunning.
You bet it is. Only one diamond in 20 million is over 3 carats, and I can assure you they're not yellow and flawless. So that diamond is 1 in 20 million, and I got to tell you, it's spectacular. Pear shapes are larger looking diamonds anyways because they're wide and spready. And I love pear-shaped diamonds, but this one's very, very special. When we start to get into diamonds that are larger diamonds, 2, 3, 4, 5 carats, those type of things, they take on a life of their own. They go up tremendously in value. And I've got diamonds that are 5 carats. I've got yellow diamonds that are 10 carats. One's on the website. I've got a 30 carat fancy intense yellow internally flawless diamond that will literally take your breath away. 30 carats, and it's internally flawless and intense in color. And if you go to New York, to Graff's or to Harry Winston's, you'd pay about $3 to $3.5 million for that diamond ring. And through myself, a diamond ring like that is $1.6 million. I know that's not for everybody, but just to give you an indication of the difference between buying retail and wholesale is the difference between making money and not making money. To own a 5 or 10 carat, yellow flawless diamond is so extremely rare. And when those type of diamonds go to auction, they sell for a literal fortune. So you can imagine what a 30 carat intense yellow flawless diamond can do. You put that on your wife's finger and let her wear it for 5 years, and we sell that diamond for you on our auction site, and everybody is going to do extremely well with it. So again, it's not for everybody, but we have diamonds starting at $15,000, going all the way up to over $50 million, and we have diamonds that are 30, 40, 50 carats for those that are into that. And again, most of our clients that do invest in diamonds invest under $50,000. They just hardworking, everyday, men and women that just want to do the right thing, and that's what we do. We put away these amazing assets, and they're private and portable, and if God forbid, some of the stories that are coming out, some of the predictions for total financial destruction and that type of thing, and currency devaluations and destruction, a diamond could be sold in any country for any currency, and we can help you with that at any time. So that's another reason that if you're concerned as we are about the tremendous spending and the greed and stupidity that all the governments have done over these past 10, 15, 20 years, and the position they put us in financially, you'd understand that by putting away an asset like a rare colored diamond could literally save your financial life. So again, it's called real estate in your pocket. That's what the Europeans refer to diamonds. You could literally walk around with a $5 million diamond in your pocket and nobody would ever know it, but try to cross a border with $5 million and see what happens. So all in all, the diamond market, especially at this particular point, is one of the best investment opportunities that we've ever presented. It's the safest, and again, we're the only company that can present to you these amazing rare colored diamonds at great prices, but on top of that, and most importantly, we're the only company that can resell it for you.
RareColoredDiamonds.com, RareColoredDiamonds.com, 1-800-432-1022 to connect with Harold. The website as well for the auctions. Take a look around. We'll have more auctions in October, hsfineauctions.com. One of the great things about silver is it's a dual metal. It has the monetary aspect to it. It has the industrial aspect to it. The thing I like about diamonds, it has a dual role as well. Sure, it's an investment, but it's also a piece of art that you can wear around your neck, on your ear, your finger. It's a tangible, usable, resaleable asset. Unlike a stock certificate, bond, or T-bill, this is an investment you can hold in your hand. Colored diamonds can be mounted, displayed, appreciated on fingers, wrists, ears, or neck of a loved one. And you can even unmount them if you want for resale on short notice, or they may actually even fetch a better price mounted. So you take a look at diamonds. They average about 10 to 15% a year. The appreciation, some higher. Concentrated wealth, a storehouse of wealth. It's better than cash in a lot of situations. And the 5 compelling reasons: privacy, portability, estate planning, price stability, and long-term growth. And Harold, I know that when you speak with people about investing in diamonds, you go through all the different aspects as to why people should be investing in diamonds, including those 5. But I love the duality of this investment where, sure, it's an investment and it's going to take you where you want to go, but how many investments? You can't wear a stock certificate on your finger. It just does not work.
Well, you certainly don't want to wear it if it's a Facebook stock, let me put it that way.
Exactly.
But, the beautiful thing, you're 100% right about that. And again, diamonds are just a great thing to own, and they give you a lot of opportunity. Now, we offer online seminars. So you can go to RareColoredDiamonds.com and you can sign up for a free online seminar, and we'll spend an hour with you, a group of people, individual, whatever your family, because we want you to understand what you're doing and how it works in every aspect of it. So on our online seminars, which are totally free of charge, we will take you through every aspect of diamonds, where they come from, how they're brought to the earth, how they're cut. We show you a video actually on the diamond being cut and polished, which is extremely exciting. On top of that, we'll show you how to read a GIA report. We'll show you all the different cutting styles of diamonds and the different clarities of diamonds, which are considered investment diamonds, which ones aren't. Then we're going to show you all about how you can make money in the market. We show you RareColoredDiamonds.com, and we show you H. Siegel Fine Auctions. So it's an amazing, informative seminar. So again, just take into consideration the minimum investment is $15,000, and it goes up from there. But again, you're talking about safe money and money that over time will definitely appreciate in value. And if we have the inflation that we're looking for, you can make 400% to 500% on your money, just like we did in 1979 and 80.
Well, in the times that we're living in with the Madoffs and the Stanford Financials and Peregrine here recently, and then, of course, you had Knight Capital losing over $400 million in a matter of about 30 minutes on a high-frequency trade that went bad due to software. Having an asset that you can hold in your hand and is real cannot be printed away, or it's a hard asset that will protect you And that's what we're saying on today's show. Create that financial firewall. Create your own financial bomb shelter, and diamonds will help you do that. Connect with Harold, rarecoloreddiamonds.com, telephone number 1-800-432-1022. On the precious metal side of things, speak with Worldwide Precious Metals. That's the company Harold recommends you use. Talk to them today about starting your own precious metals investment account, 1-866-623-2002, the website wwpmc.com. One of the stories we have in our newsletter, in the silver section of our newsletter, and don't forget, get your name on the list for our newsletter from Harold or Worldwide. CNBC did a story, it's called Adding Swag to Your Portfolio. For investors looking at a grim decade of money printing and financial repression, it might be time to get some swag in your portfolio. And that is silver, wine, art, and gold. Obviously, we want to take it to another level. We believe you want to add diamonds as well. But they go on to say in the story, those are all real assets that might just outperform if official policy causes the money supply to surge. That's the idea of Joe Roseman, who says swag will do very well over what could be a very troubling next decade. These assets effectively act as a money supply index tracker. Roseman, who for 16 years was a money manager and economist for More Capital, run by legendary Louis Bacon, if the authorities are going to bail themselves out, money supply will expand. Every single time governments have been here, this is exactly what they have done. His argument, in short, is that a combination of excessive debt, aging populations, resource scarcity, and financial repression will bring on extremely poor performance in equities and bonds. And he goes on to say that he believes that what will end up happening is money printing by central banks, and they are going to print a lot of money. As a result, hard assets will do very, very well. You can't make up gold. You can't make up new Picassos. And he goes on to say that now is the time to have some swag in your portfolio to protect yourself from the coming money printing. And Harold, I like the idea of having some swag in your portfolio. I think the only thing he's missing is diamonds, but he's on the right track. We have about 2 minutes left here. He's on the right track when he talks about having hard assets in the environment that we're in.
Well, that's right. All you have to do is go back in history, and again, to similar times to where we're in right now, and see what investors were doing. And it's not that much different. Back in 79 and 80, under very similar market conditions, problems in the Middle East, potential inflation, world problems, that type of thing. You saw gold, silver, diamonds, all hard assets, art, wine, everything take off at that particular point. So, again, we're going through very, very difficult times, probably the most difficult times that we've ever seen. And again, as small investors, all I want to make certain that we're doing is the right thing. Be conservative, don't take unnecessary risks, no speculation with high leverage, and put away some hard assets. Gold, silver, and diamonds will get us through these extremely difficult times and put us in a situation 5 to 10 years from now where we can take advantage of undervalued markets, and that's what I believe is going to happen.
Thank you very much, Harold Siegel. Have yourself a fantastic weekend, and thanks for your knowledge on another great show.
Well, my pleasure. I really enjoyed doing the show today, and I wish everybody a wonderful weekend and a very profitable day.
Get our newsletter this week. We have some outstanding information. Speak with Worldwide Precious Metals about getting your name on the list, or speak with Harold. We send it out via email free of charge every week. You can go through it in 5 to 10 minutes. We know you're busy. You can go through it on your smartphone very, very quickly. You'll be up to date, or you can spend hours if you want to. One of the stories you want to check out, Ambrose Evans Pritchard, excess debt must go via inflation or default. And we're betting that the central banks of the world, the countries of the world, will not default. They're going to inflate things away. That's why you want to create your own financial firewall, create your own financial bomb shelter with hard assets. Speak with Worldwide Precious Metals, the company Harold recommends you use. Start your precious metals investment account today. wwpmc.com, 1-866-623-2002. Connect with Harold, rarecoloreddiamonds.com, or call 1-800-432-1022 and speak to him about our featured diamond this week, that stunning yellow diamond. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.